For this video, we will focus on Schedule D, which is on capital gains and losses, and it's also on how to pay taxes on stocks. And for the situation here, we have a married couple filing jointly. Their names are Larry Jones and Mary Jones. No children. And his Larry Jones W-2, he made $45,000 in 2023 and had $4,000 federal income tax withheld. And for Mary Jones, the wife, she made $50,000 in 2023 and she had $5,000 income tax withheld. Their combined income will be $45,000 plus $50,000, which is $95,000. And their combined income tax withheld is $4,000 plus $5,000, which is $9,000. And in the year 2023, the couple also bought and sold some stocks. And so at the end of the year, they get the Form 1099-B from the stockbroker. And so this is what they bought. So on March 4th, 2023, they bought 100 shares of Snap and then sold it on March 10th. And the cost or the basis of buying the stock is $3,000. When they sold it, or the proceeds is $3,200. And so $3,200 minus $3,000, so they had a gain of $200. And then again on April 7, 2023, they bought 200 shares of Snap, and sold it on April 17 and made $400. And then on May the 1st, they bought 100 shares of Snap and they sold it on May 10th and they had a loss of $200. But 5 days later, on May 15th, they bought another 300 shares. And because this is from May 10th to May 15th, that's only 5 days, then this loss, because they bought the same stock again within a period of 5 days, this loss here is considered a wash sell. So this is not considered a loss. And therefore this loss right here must be added to the basis of the stock that they bought on May 15th. And so here's the on line 3, the loss is $200, but it's considered a wash sell. And so on May 15th, they bought 300 shares at $25, and so that's $75 plus the $200 wash sell. And so the basis for this line, for the purchase on May 15th, will be $7,700. And then they sold it on May 20th, and so the gain will be $100. So once again, the rule for wash sale is that you have to wait 30 days to buy the same stock. If you bought it before the 30-day period, then the loss will be considered a wash sell. And then this couple, they also had some long-term stock, and then they got this 1099-B from the stock broker company. And so here they sold 300 shares of BBB stock, and they bought the stock on March 3rd, 2022, and sold it on July 8th, 2023. So they held it they held this 300 shares of BBB for more than a year, and so it's considered long term. So any stock that's held more than a year, then it's considered long term. So the proceeds is $9,600, and then the cost of the basis is $14,600, and therefore we subtract. We do 9,600 minus 14,600. It'd be a $5,000 loss. And then here's long term, and here's indicated that this form is reported to the IRS. And so now we'll go to Schedule D and input all of this, and then input the long-term stock. And so this is Schedule D, which is on capital gains and losses. And so for short-term stock, this stock that's held less than 1 year, and then it's going to be input on Part 1. And then for long-term stock, will be input the information on Part 2. And then to input all of this information right here, we need to go to Form 8949, and then we'll come back to Schedule D. And so Form 8949, which is on sales and other dispositions of capital assets. And so on Form 8949, the first thing we need to do is we need to decide whether it's check box A, B, or C. And so we have the stock transactions, the short term, that's reported on Form 1099-B, and it was also reported to the IRS. So that's what we have in this case. So this couple, they received the Form 1099-B, and the Form 1099-B was reported to the IRS. So we would check box A. And then what we do is all of this, we just go to the Form 1099-B. And so normally the stockbroker would send a Form 1099-B like this right here. And so we would just input everything here as seen. And that's what we have right here. And of course the W here is for the wash cell. And then the bottom line 2, we just total everything up. So add all of these up, and we get 19,900. And then add all of this up, we get 19,400. And then here we get 200. And then here we get 700. And then we would take all of this and go back to Schedule D. So when we go back to Schedule D on Part 1, which is the short-term gains or loss, and so the first thing we do is this. We need to decide whether to use line 1A, 1B, line 2, or line 3. And so we look at line 1B right here. It says total all transactions reported on Form 8949 with box A checked. And so we go back to Form 8949 here. We checked box A. And since we checked box A here, then we will use line 1B. And then the totals here, they come from here. 19,900, 19,400, 200, 700. 19,900, 19,400, and then 200 and 700. And then we don't have anything on line 2, so it's all 0. We don't have anything on line 3, so it'll all be 0. And this couple does not have form 6252 or any of these forms, so it'll be just 0 here. Note schedule K1, and they don't have any loss carry over from last year, so it'll be 0. And then we just add all of this up, we get $700. So this is the gain. This is the gain from the stock. Short term, it'd be short-term gains. And then they also have some long-term stock. And so now let's go back. So this is the long-term stock. So again, we need to go to form 8949 first. So this is for the long-term gain. So the first thing we need to decide is it box D, box E, or box F? So we have the stock transaction was reported on Form 1099B, showing the basis, and it was reported to the IRS. So that's what we have here. So we check box D. And then they have the description, 300 shares of BBB. Stock was purchased on March 3rd, 2022, and sold on July 8, 2023. The proceeds, or the sold price, the price that they sold it, the sales price is 9,600, and then the cost basis is 14,600. And there was a loss, and so it'd be $5,000. If there's a loss, then we need to put parentheses around the $5,000 to indicate that it's a loss. And then we would total everything down here, 9,600, 14,600, 0, and then $5,000 loss. And then now we go back to Schedule D and then put all of this on Part 2. And so again, this is Part 2 on long-term gains or losses. And so first we have to decide, is it line 8A, AB, line 9, or line D? And so we look back at line Form 8949. We checked box D. And so on Schedule D, if we look at this line AB right here, it says total all transactions reported on Forms 8949 with box D checked. So we have 9,600, 14,600, 0, and then $5,000 loss. And then nothing here, and then nothing here. And nothing here on line 11, nothing here on line 12, and no capital gain distributions, and then no long-term capital loss carry over from last year. And so the total on line 15 is a $5,000 loss. And then line 16 is where we combine the short-term gain and the short and long-term gain or losses. And so for the short-term, they made a stock, they made $700, and then for the long-term stock, they lost $5,000. So we combine them, 700 plus 5,000 loss, it'd be $4,300 loss. And so we need to put parentheses around the 4,300. And then it says if line 16 is a gain, then complete all of this, but complete lines 17 through 20. And then if line 16 is a loss, then skip lines 17 through 20 and go to line 21. So we have a loss, so we just jump to line 21. And so here we're in line 21. Now here we have a loss of 4,300, but the maximum that we can input is 3,000. So this couple had a loss of $4,300, but the maximum that they can use for this year is $3,000. And then what we do is take this $3,000 and go back to Form 1040 and input it on, enter it on line 7. So this is Form 1040, and then this is where we would put the $3,000, line 7. And so since there was a loss of 4,300, but we can only deduct 3,000, then the difference here is the difference between 4,300 and 3,000 is 1,300. So what do we do with that 1,300? Then next year when we do the tax return for 2024, and then what we do is we go back to the long term, to this part 2 right here, and then in line 14 we would enter $1,300 here as a long-term capital loss carry over. And so the $1,300, it can be used as a deduction on the 2024 tax return. And so it's the loss carry over for 2024. So that's what we do with the $1,300 here. And then line 22, it says do you have qualified dividends on Form 1040, and this couple doesn't. Now, in the event that this couple does, then you would want to complete the what's called the qualified dividends and capital gain tax worksheet. For people who have qualified dividends and or long-term capital gain, and then you may qualify for a lower tax rate. So for people with filing status single, and then these are the tax rates for long-term capital gains and qualified dividends. And then for married, for people with filing status, married filing jointly, and then these are the tax rates for the qualified dividends and the long-term capital gains. And so what it means is this. We can, you would go through the Form 1040 and then just figure out the tax using just the regular tax table. And then after you figure out the tax on the using the tax table, and then you would go and complete and figure out the tax another way. And if you have qualified dividends or long-term capital gain from gain, then what we can do is complete this worksheet right here, and then it might give us a lower tax rate. But then for this case, we don't have qualified dividends and we don't have a long-term capital gain, so we don't need to complete this worksheet right here. And so that's what this Schedule D, line 22, that's what it's referring to. And so now that we have completed all the information from the stock, now we can go back to Schedule 1040 and then complete this tax return. And before I complete the Form 1040, I need to go back to this part a little bit. So right here, we would what we would do is just go to Form 1040 and just figure out the tax using the regular tax table. And then we also figure out the tax using the worksheet, the qualified dividends and capital gain worksheet. And then what we would do is just use the whichever is smaller, then we would use it. And so if the tax here comes out to be smaller, then we would use the tax from the tax table. But if it's, the worksheet here comes out to be smaller, then we would use the value from here. And so now we can complete Form 1040. So here we have the names, Larry Jones, social security number, Mary Jones, and then social security number, filing status, married, filing jointly. No digital assets, no children. So this couple, they have a combined income from their W-2s is $95,000, and then no other income here. So line 1Z is $95,000, and then nothing here. And then line 7, that's the loss from the Schedule D. So we would put the loss in parentheses. And line 8, no Schedule 1, so nothing here. Line 9, 95,000 plus the $3,000 loss, so be 95,000 minus 3,000, and we have $92,000. No Schedule 1, so adjusted gross income is 92,000. And then for this couple, we use standard deduction, and the 27,700, and then no other deductions here. So total deductions will be 27,700. And then taxable income will be 92,000 minus 27,700. Taxable income will be 64,300. And then we go to the tax table to figure out the tax. And then this is the tax table, and then we would scroll down until we see 64,300, and then the tax for married filing jointly, then it'd be 7279. So the tax is 7279. And so using the table, the tax is 7,779, and as I mentioned earlier, if for a situation where there's qualified dividends or long-term capital gain, then what we want to do is complete the qualified dividends and capital gain tax worksheet and see if we end up with a smaller tax than using the tax table or not. But in this case, we don't have any qualified dividends or long-term capital gain. So nothing from for line 17, and so line 18 will be 7,279. No child tax credit, no Schedule 3, so line 21 is 0. Line 22 is subtract line 21 from line 18, and we have 7,279. No Schedule 2, no self-employment tax. So the total tax for this couple will be $7,279. And then from their W-2s, their federal income tax withheld is $9,000. So 25D will be 9,000. Nothing on 26, nothing here, no credits or anything here. So 32 will be 0. So the total payments or the income tax, the federal income tax withheld is $9,000. So in summary, the total tax is 7,279, and they had $9,000 withheld. So the difference is 1,721. This will be the refund. And once again, if you would like to file the tax return online for free, then the IRS has what's called IRS fillable forms, and then you just log in and then just fill in the information from schedules, from Form 1040, Schedule D, and then Form 8949, and then also the information from the W-2s. And so once again, the focus of this video was on Schedule D.